Friends, your money is in automatically. And I'm not saying this as a metaphor. Right now, as we speak, a portion of your investment would be moving into SpaceX. Without your knowledge, without your approval, without anyone asking you. I know that sounds extreme. I thought so too when I came across it. So I spent the last few days going deep into the story. The SpaceX IPO, the biggest in the stock market history. And what I found was not what I expected. This is not a story about rockets. This is not a story about Elon Musk. This is about 3 rules that were quietly written without your knowledge, without government approval, overnight. And that alone will determine where a portion of your investment money flows into. Now, I'm not here to tell you whether SpaceX is good or bad. I'm not here to qualify whether Elon Musk is a villain or a hero. I genuinely don't know the answer yet. And anyone who's telling you or giving you this answer is selling you something. What I'm here to do is show you exactly what I found. The full picture, including what surprised me, the parts that confused me, the parts where I hit dead end and had to start over, because that's the only way this makes sense to me, not as a verdict, but as a journey. Let me start with a number. $1.75 trillion. That is what SpaceX is asking to be valued at in today's IPO. Priced at $135 per share as per SEC filings. To give you a perspective of how big this is, the entire Indian stock market, every listed company, every share across every industry is worth roughly around $5 trillion. SpaceX alone wants to be worth around 35% of that. Now you might be thinking, what does that have to do with me? I don't invest in American IPOs. I invest in SIP. I have fixed deposits. That SpaceX is an American story. This is exactly what I thought too until I found the 3 rule changes. And those 3 rule changes mean a portion of your investment, your SIP, your international fund or your retirement money may already be on its way into SpaceX. Not because you chose it, not because you analyzed it, but because the rules that govern where your money flows into were rewritten and nobody sent you a memo. I want to take you through this story the way I discovered it. By the end of this episode, you will know exactly how your money got in automatically. You'll know who changed the rules, how they changed them, and what this means to every investment you hold right now. And you'll know why nobody told you sooner. Let's go find out. Hi, this is Vijay Kesari and welcome to Andhra Podcaster, where we discuss questions, perspectives, and possibilities focused on development of Andhra. Alright, let me tell you what exactly this SpaceX is before I tell you what this IPO actually is. I made a mistake early in my investigation. I assumed that I already knew about this company. Rockets, Elon Musk, Mars. I thought I could skip the basics. I couldn't, because SpaceX is not one company. It is 3 completely different businesses wearing the same uniform. And understanding that is key to everything that comes after. The first business is rockets, specifically Falcon 9, arguably the most reliable rocket launch vehicle ever built. In 2025, SpaceX space segment generated $4.1 billion in revenue. Who pays them? The US military pays them, NASA pays them, private satellite companies from across the world pays them. Battle-tested, real business. The second business is Starlink. The numbers literally shocked me when I read through these SEC filings about this business. Do you know how many subscribers that Starlink already has? 10.3 million subscribers across 164 countries as of March 2026. Can you take a guess about its top line and bottom line? $11.4 billion in revenue last year with EBITDA margins of 63%. To put this into perspective, Airtel's India's operating margins sit around 30%. Starlink is generating profits at twice the rate of the India's biggest telecom companies. That is genuinely impressive by any standard. So Starlink so far is a remarkable company. Real technology, real revenue, real track record. Now here is where my investigation hit its first unexpected turn, because there is a third business in this IPO which is not in the public headlines much. It's called XAI and it changes everything about why this IPO is happening right now. Do you remember this picture? October 27, 2022. Elon Musk walks into Twitter's San Francisco headquarters carrying a bathroom sink. It was a joke. His way of saying, let that sink in. I own this place now. He had just paid $44 billion for that deal, and he was not alone who paid the bill. Standing behind him, invisible to the cameras, were some of the world's most powerful investors. Andreessen Horowitz, a Saudi sovereign wealth fund, Peter Thiel, Jack Dorsey, they had all written enormous checks. They believed in the deal. And there were genuine reasons to believe in too. Twitter was one of the most influential platforms on earth. The argument was Twitter under new ownership can actually generate real growth and real profits. That was a reasonable thesis. But after 12 months, something went really wrong. Badly wrong. Advertisers fled, revenue collapsed. The platform was renamed X, which confused many users and diluted one of the most recognizable brands in the world. This $44 billion purchase purchase was hemorrhaging value. I initially thought this was a simple story of a bad business decision, but when I looked closer, I found something more complicated. The investors were trapped not because they made a bad bet, markets recover, businesses turn around, but because they had invested in a private company. You cannot sell shares in a private company on a Tuesday morning when you need cash. You are locked in until the company recovers or it goes public. So Elon Musk made a move that I had to read 3 times before I understood it. He merged X into his artificial intelligence company XAI, then he used SpaceX to acquire XAI. 2 transactions, no cash changing hands, just shares being swapped on paper. The result was extraordinary. The original Twitter investors, Andreessen Horowitz, the Saudi fund, Peter Thiel, Jack Dorsey, suddenly all these original Twitter investors suddenly held SpaceX stock instead of Twitter stock. Their losses from Twitter were now sitting inside one of the most admired private companies in the world. On paper, it looked like a rescue. In a way, it was. But here is a major problem. Paper wealth is not real wealth. SpaceX is still private. Those shares do not have a public price. Those shares cannot be sold. They cannot fund the next investment, and they cannot return the money to those institutions that funded the original Twitter investors. To turn that paper into real money, SpaceX has to go public. And it must go public at such a high valuation that Twitter disaster disappears from the balance sheet. That valuation, $1.75 trillion, is not just a random number. It is a number that was worked backwards from what these investors need to make. But here is a question I couldn't answer during this investigation journey. At $1.75 trillion, nearly 95 times its annual revenue according to Bloomberg calculations, who on earth is going to buy this? To understand what I found, I need to explain one thing about how modern investing actually works. Just one thing, and I promise after that everything will click. Most people who invest today, either they know it or not, they are passive investors. They don't pick individual stocks. They invest in an index fund. A fund that automatically buys every company in that index, like the Nifty 50 or Nasdaq 100 in proportion to their size. Think of it this way. You know Mumbai Dabbawala system, right? Every day, thousands of dabbas are picked up from their homes and delivered to offices across Mumbai. Precisely, reliably, without a single phone call or human intervention in between. The system just runs automatically to a fixed list of addresses every single day. An index fund works exactly like this Mumbai Dabbawala system. Your SIP money flows in and it will be delivered automatically to every company on that index list in the same proportion without any human deciding where it goes. Do you know why the system became so popular? 9 out of 10 professional fund managers over a 15-year period lose to the very index that they are paid to beat. Not occasionally, consistently. So naturally, the shift to passive investing made complete sense to many of the investors, and it worked beautifully for decades. And here is a critical vulnerability I discovered. The Mumbai Dabbawala system only works if the address list for doing those deliveries are carefully maintained. If a new address gets added, if a new company enters the index, the dabba gets delivered there automatically without checking if the address is safe, without even asking you. And there was normally a safeguard. A company had to wait for about 3 months to enter into any major index. And this waiting period is there for a reason. This waiting period allows the market to understand the company. Market can take the time to discover whether that particular company deserves those trillions of dollars that will be flowing in automatically through these index funds. Now that safeguard no longer exists. Nasdaq removed it on May 1st, 2026. Here is what exactly changed. 3 rules quietly with no government approval. First rule change. The waiting period for Nasdaq 100 index inclusion cut from up to 3 months down to 15 trading days, 3 weeks. Second rule change. There is no minimum public float requirement. Previously, a company need to make 10% of their shares publicly available to join this index. That rule is eliminated outright. SpaceX is floating only 3 to 5%. That is now allowed. The third rule change, and this one made me stop completely. For companies with a small float, Nasdaq introduced a reduced but gradually increasing index weight. This means the passive funds tracking the Nasdaq 100 are forced to buy SpaceX automatically within 3 weeks of listing, regardless of price, regardless of whether an individual investor thinks this makes sense. Now the obvious question, why would Nasdaq allow this? When Nasdaq's entire purpose is to maintain fair and orderly markets, why on earth did Nasdaq allow this? This makes me read that Nasdaq is no longer just a stock exchange. It is a publicly listed for-profit corporation. It competes with New York Stock Exchange for listings, and the most valuable listing in history went to the one who wanted it most. Reuters reported in March, citing sources sources familiar with the matter that SpaceX signaled early on that rapid index inclusion was a central condition for its choice of stock exchange. Nasdaq changed its rules, SpaceX chose them. For Nasdaq, this is a straightforward business logic. It gains a listing, it collects trading fees, and guarantees SpaceX a forced wave of buyers through its index mechanism. And here's the interesting part. These rule changes doesn't require any government approval. US government has no say in changing these rules. Index providers are completely self-regulated. The US SEC has no legal jurisdiction over them. $30 trillion of global retirement savings, this includes Indian investors who have international fund exposure, are directed to organizations that answer to no regulator. Let me walk you through how this exactly plays out in 4 steps. And I want you to notice how each step makes the next step inevitable. Step 1. SpaceX releases 3 to 5% of its shares to the public. You now already know that in a normal IPO, a company usually makes 15 to 20% shares available. Compared to that, the SpaceX 3 to 5% is tiny. Since there is tiny supply, any real demand will spike up the price crazily. This way, scarcity is engineered from day one. Now, step 2. A significant portion of IPO shares are allocated to ordinary retail investors. I initially assumed this was straightforward predatory, but when I investigated further, I found a more complicated picture. While some analysts argue that this democratizes access to high-profile IPO, others argue that the Wall Street's high-profile investors are staying away from this particular SpaceX IPO price, which points these shares towards less experienced retail investors. I am giving you both sides, you decide. And now comes step 3. After just 15 trading days, SpaceX enters the Nasdaq 100, every international ETF tracking the Nasdaq, every US technology mutual fund, every global index fund with Nasdaq exposure, including funds held by Indian investors. Here's where the wall of automatic capital arrives. Not because anyone chose SpaceX, because the rules say they must. And here is a closing shot. Step 4. Some early investors have already planned their exit windows. CNBC reported that if the stock is trading at least 35% above the IPO price, insiders can sell additional positions. Then there is a rolling schedule at 70, 90, 105, 120 and 135 days post IPO where another 70% unlocks at each interval. See, I cannot tell you with certainty whether this sequence will actually play out in reality. Markets are unpredictable. SpaceX might perform spectacularly. That is genuinely possible. But what history tells us, and this comes from a Bloomberg analysis of every major tech IPO since 2000, it says the companies listing at 40 times revenue have historically underperformed the broader market significantly in the first 3 years. This was the finding about companies that got listed above 40 times their revenue. Here, SpaceX is listing at 95 times its revenues. That historical pattern is not a guarantee, but it is not nothing either. Now let's contextualize this phenomena to India. NASSCOM's latest data shows that India's IT BPM industry employs close to 5.8 million people, and every single one of those jobs supports 3 to 4 additional jobs in the broader economy. That could be in housing, retail, transport, education. We are talking about the livelihood foundation in cities like Hyderabad, Bangalore, Pune, Delhi. This year, Indian benchmark indices have fallen over 10%. The Nifty IT index has declined 19% in 2026 alone. This is NSE data. Infosys, TCS, Wipros, the companies whose offer letters once changed the trajectories of families are cutting hiring as AI automates their work. India's market capitalization has lost over $1.2 trillion from its September 2024 peak. And do you know how much foreign investors have pulled out from Indian markets? It's over $27 billion since Jan 2026. And India, which 18 months ago had a total market capitalization 3.5 times larger than South Korea and more than twice Taiwan's, has now been overtaken by both. 7th in the world in less than 2 years. And notice what powered those East Asian markets? TSMC, Samsung, SK Hynix. These are all the companies that make chips that power AI companies. India missed that wave entirely. Now here is the part that I want you to sit with. The companies now preparing to go IPO, SpaceX, Anthropic or even OpenAI, these companies are building the infrastructure that AI runs on. And if you hold any international fund, a Nasdaq ETF, US technology fund of funds, any financial product that has global exposure, your money is connected to these American indices. When SpaceX enters these indices, your investments, your money automatically takes positions inside SpaceX. Not because you chose, It's because the rules say so. I'm not saying that this is a conspiracy against Indian investors. I'm not saying anyone in New York sat down and thought about your SIP. Nobody thought about your SIP. That's the point. The system moves your money so smoothly, automatically, and the people who designed this entire system, who changed these new rules, didn't even think about you at all. And let me be very straight about what SpaceX is not. The rocket business, the space segment, it generated $4.1 billion in revenue in 2025. It is battle tested, real business, reliable. Starlink is genuinely impressive. I started this investigation with somewhat skeptical of it and ended it convinced that it is a transformative business. $11.4 billion in revenue, 63% EBITDA margins, 10.3 million subscribers across 164 countries. If Starlink would have listed on its own, it alone would have worth hundreds of billion dollars. XAI is the actual question mark. It alone, this AI segment alone, burned $6.4 billion in 2025 building data centers and training its Grok model. It has no clear path to profitability. It was folded into SpaceX through a paper transactions that helped cover the original investors' Twitter losses and convert that into SpaceX equity. And that is financial engineering, not product building. And you are being asked to buy it with everything else at 95 times its combined revenues. And here is where I landed. SpaceX is genuinely a remarkable company. Starlink alone justifies a very large valuation. The rocket business is solid, the technology is real. But $1.75 trillion of valuation, which packages XAI's losses, Twitter investors' rescue needs, and a set of 3 rule changes that guarantees or forces passive investors into SpaceX, and that too before the price has any chance to find its natural level, is raising tons of unanswered questions. In a way, you are not just buying SpaceX, you are actually buying a package. And the shocking part is the rules or the terms of that package were set by people whose interests are not same as yours. Whether the package turns out to be a good investment, nobody knows. Markets surprises, SpaceX could deliver on every promise, Starship could work, the orbital data center could actually start generating returns in the next 10 years. These all could be possible, but we all deserve to make the judgment with full information, not have it made for us automatically on our behalf by somebody who's sitting in New York boardrooms. Friends, now let me bring this back to where we started. Your SIP, your monthly investment, and your quiet faith in the system that it runs in your favor over time. Passive index investing is still the most favored option for most of the investors for building wealth. I am not telling you to panic. I am not telling you to liquidate anything. The fundamentals of patient, disciplined investing have not changed. But passive investing only works as long as the integrity of the index holds solid. When companies enter indices at rational prices after sufficient market discovery, the system works for you. When that process is bypassed, when rules are rewritten to fast track a specific company at a specific valuation for specific people's benefit, the system is working, just not necessarily for you and me. What I want you to take away from this episode is not fear, not panic, just awareness. Look at your international funds. Understand what index they track. Understand what entering that index means. Because right after SpaceX, there is OpenAI and Anthropic's IPOs coming up. And there will be others too. But the rules are rewritten. The playbook has now been rewritten and that will be used again. You do not need to do anything dramatic. You just need to know what your money is doing. Because the most expensive thing in the world is not a rocket to Mars. It is trusting a system without understanding it. And do let me know your thoughts. Whether you still think that these 3 rule changes that we discussed in this episode in the case of SpaceX IPO are really in our favor or somebody else's. If you think they are not in our favor, type take care in the comments. And with that, I'll see you in the next episode. Bye-bye.